Come back to Helper Dad. Let's talk about the S&P 500, a time-tested path to prosperous investing. What is the S&P 500? It's a market capitalization-weighted index of 500 of the largest publicly traded companies in the U.S., representing about 80% of the total U.S. equity market capitalization. It's important for investors because it serves as a benchmark for U.S. stock market performance, providing broad diversification with a single investment, and has historically offered strong long-term returns. ETs understand the S&P 500 a bit better, including its composition and selection criteria. Companies must be based in the U.S. and meet minimum market capitalization requirements, as well as certain liquidity and financial viability criteria. A committee then selects companies based on sector representation. Market capitalization weighting means larger companies have a greater influence on the index's performance, with automatic rebalancing that reflects market changes. The S&P 500 also provides sector diversification, spanning various industries such as technology, healthcare, finance, and consumer discretionary, which reduces risk compared to investing in a single sector. Let's explore the benefits of investing in the S&P 500. You gain instant exposure to 500 companies across diverse sectors, reducing idiosyncratic risk or company-specific risk. Investing in the S&P 500 is also low cost, as index funds and ETFs tracking the S&P 500 have low expense ratios, offering a cost-effective way to achieve broad market exposure. It also allows for passive investing and time savings, eliminating the need for stock picking and active management, which reduces trading costs and emotional decision-making. Historically, the S&P 500 has shown strong long-term returns, outperforming many actively managed funds and providing a benchmark for investment performance evaluation. How do you actually invest in the S&P 500? You can use S&P 500 index funds, which are mutual funds that track the S&P 500 index and typically have low expense ratios. Alternatively, you can use S&P 500 ETFs or exchange-traded funds, which trade like stocks on exchanges and offer intraday liquidity and flexibility. When choosing, consider fees, minimum investment requirements, and investment options, and research reputable brokerage firms. Another useful strategy is dollar cost averaging, investing a fixed amount of money at regular intervals, which reduces the impact of market volatility. ETs talk about risks and considerations. The S&P 500 is still subject to overall market fluctuations, meaning economic downturns and geopolitical events can impact performance. There's also concentration risk, as the index is heavily weighted towards the largest companies, so performance can be significantly influenced by a few top holdings. Remember, there's no guarantee of future returns. Past performance is not indicative of future results, and market conditions can change over time. Finally, there's inflation risk, where returns may not outpace inflation, eroding purchasing power. In conclusion, the S&P 500 offers a time-tested path to building wealth through diversified, low-cost investing. Consider your risk tolerance and investment goals before investing. Start investing in the S&P 500 today and take control of your financial future. Thanks for watching. See you next time on Helper Dad.